Good afternoon. I'd like to welcome you to CNFT's educational video series. Today we're going to talk about one of our indicators, that is the previous day's value area, and show how it can really help your trading. In the market profile world, there are three basic trades, and the first trade is you open in value, and in this trade you want to fade the value area highs or lows. The second one is that you open outside of value, and that usually gives you a directional indicator. And the third one is you open outside of value and you come back into value. And we're going to talk about those three. So on this first day up here on the far left hand side of the screen, you can see the market gap down and it rallied all the way back. And so this is the bottom of the second standard deviation. This is the first standard deviation. And your first trade up is a limit sell against this dark blue dotted line. The market does come back down. It gives you a very nice trade. This time it comes up and it goes through that dark blue dotted line. The next trade is a limit sell against that lighter blue dotted line, and then again it gives you a good trade. You come back down, you trade back down to this point. This time we enter value. You don't know if that's going to hold or they're just going to get stopped. So when you take out this high right here, you buy stop into the market. And you can see the market trades all the way up to the value area high right here. And you would have a limit sell inside that value area high. The market chops, it trades overnight, it's very slow. Here we get another retest of that high, so we failed to move higher. You can get short here at the second standard deviation when you enter back in on a sell stop, or being more conservative, the first time in the value area, the second time when you take out that first low right there, you can sell stop into the market, and you can see that you get a very nice trade all the way down to here. We had some help from the news, no doubt on that. The market rallies back up, so here's our dark blue line once again. So you got a limit sell against that, and you can see it produces a very nice trade down to the mean green line. This is our mean green line. You can have a resting limit buy right at that mean green line, or a resting limit buy against the blue dotted. It holds, the market trades back up. This time it goes to the light blue dotted line, which is the bottom of value from the previous day. There's another limit sell, and it produces a reasonable trade. It's not the world's biggest trade, but it is a profitable trade. Market holds, it trades back up, it comes through this value area low right here. You don't get a chance to buy it higher, but your next trade up is a mean green trade with a limit sell here. It does take a while to develop. The market comes back down, gets into this first standard deviation down to our second standard deviation. There was a little nice sell stop right here. Market rallies back up. It stops once again at these highs. Comes back in, enters the value area for the second time. You sell stop in when you take out those bars lows, and it produces a very nice trade. Market rallies back up. This time it stops at the value area high. There's a limit sell right there, and it produces a great trade. Okay, in the overnight session things get pretty quiet. The market doesn't really go anywhere, but the first trade would be a limit sell against this dotted blue line right here, and that's a scratch, lose a little, make a little. Market eventually does break. Market comes back up, stops at the first standard deviation, that light blue line right there. A limit sell against that produces a very nice trade. And you can see right here, you go through the value area. When you take out that bars high, you're long on a buy stop, and it trades up to the mean green line once again. And that's always a pretty good place to have a resting limit sell or a resting limit buy. So you can see right here, out of all these trades, sometimes you had to spend quite a bit of time in the trade, but they're very well defined. You know where support and resistance do lie with our red and blue dotted lines, and then our green dotted line is the mean green trade, and that's always a good trade the first time into it. Worst case scenario, you're usually looking at a stop. I mean a break even, not a stop. So if you'd like to know more about the software, we'd like you to go to our website, www.cnfuturestrading.com. At our site, you'll get an overview of this particular study on this video. I'm sure it will generate interest and questions on your part. To answer those questions, please contact us via email at info@cnfuturestrading.com or call us directly at 312-361-3895. I'm looking forward to seeing you in the room after having viewed this video. In the meantime, we wish you good trading.